Wednesday, December 18th, market analysis. Stan Ehrlich, good morning. 10:04 California time and a little past the middle of the trading session. Remember, I start out with the E-mini and stock indexes and go to commodities. And lately I've been following one particular stock. And I've been talking about the Santa Claus rally, which I have increasingly pinpointed the timing, date and time for the entries and exit for the optimized Santa Claus rally that I have liked over many, many years now. Okay, so the E-mini got overbought a couple of weeks ago, has gone sideways. There is a very substantial specific support area right around 61.08, 09. Very tight little range. This morning we came down to 13, 61.13 and bounced. The bounce didn't go very far. And as you can see from this 5-minute chart, the highs for the last couple of weeks have been coming down relatively slowly, but coming down. And the lows are very close to the same levels, providing a possible flat bottom right triangle. Now, the flat side is usually the side that's broken. So as I've been talking about for a couple of weeks now, I'm looking for a downside move on the E-mini to at least this trend line, and I think that's probably too close, 60, 66. Instead, my downside objective is actually 59.27, and I'm running a little low on time. I wanted it to be just before Christmas, or right around 1 week from today, Christmas. So I don't have very many days to come down a relatively significant amount. Now, we do have an FOMC, and I hardly ever mention fundamentals, meeting in about 1 hour. If they say something negative, that could cause the break. It could be other factors. You also could have a break even if they say something positive. Maybe it's not as positive as the market's expecting. But there are 100 reasons, many, many more than that. So I'm looking for a break. I'm looking for support to be broken, and I'm looking for a move sometimes very soon here down to potentially 59.28. Okay, 5-minute chart. We're going up to the spider, essentially the same commentary, closing below 602. And the SPY should cause it to come down to around 583. Next, the spider 5-minute, having a little trouble. That's an old line I don't need anymore. So I'm looking for it to break below 602. And then maybe on the way down, bounce off of a couple of minor support areas. What about the QQQ? Overbought 2 days ago. Did not have a higher high today, therefore cannot at this point have an outside trading range. Yeah, we had a lower low, but what I want is the higher high and the lower low and a lower closing price for a red bearish ER sell signal. Something like that happened on 11/11/24. But it won't be exactly the same, but still another sell signal. That one was great. This one was great. This one could still be very good if we get one, and we do not get one every single turning point. Often, though. Here's the 5-minute chart. Sideways for the day, and a little bit of a dip yesterday. Really not showing that much weakness. I want some of these little support lines I've filled in here to get broken and to get down again to my minimum downside objective on the QQQ, which would be around 515 and maybe a bit lower. And there's the 5-minute QQQ. NASDAQ NQ futures overbought. Could have, but we didn't get higher than yesterday's high. A bearish engulfing, we didn't so far. Doesn't look like it's going to happen. Probably not. So we're just starting to slip a little. I'm going to be very careful as to what happens when we get to this bullish support line now. It used to be a bullish resistance line, the top of an upper slanting wedge, but we broke out on Monday on the upside, held basically yesterday, and we're still, for all practical purposes, holding again today, just a little bit lower, a slightly lower low, still above the line. The first sign of significantly more weakness would be closing below this line. And if that happens, and I think it's going to, I'm looking for a test of the lower line. Let's call it around 21,264. And really, there's another level that could cause some good support. We'll see at 21,600. Next, the 5-minute chart for the NASDAQ, chewing away at some minor lows, but it's only been a day and a fraction, so I don't have enough evidence yet. Now, almost the exact opposite. The YM, the Dow Jones, unbelievably has had 9 days in a row where every day the high was lower than the previous day, the low was lower than the previous day, and the close was lower than the previous day. 9 days in a row that happened, marching straight down. Now we got oversold on Monday and yesterday and today. I think it's about to turn back up. We're at a support level. It's oversold. A couple of combinations I like very much. Close to a bull trend line, which is the bottom of an upper slanting channel. So there's a variety of reasons that could bounce a bit. I don't think very far for very long. Next, YM, 1 minute, 5-minute, bouncing, not particularly impressive yet. Okay, Russell, much like the Dow, YM, coming down, not as incredibly consistently, but we're in a no man's land at the moment. A broad support and resistance area. Now support is going to be down to this trend line and or a little bit lower, 2312, maybe 2330. And the 5-minute chart on the Russell. Okay, ladies and gentlemen, interest rate futures bonds. Probably going to be significantly affected by the FOMC meeting at 11 o'clock California time in about 50 minutes, 50 minutes. We did have a bullish engulfing yesterday. That's the first indication that this sort of a double bottom over a month and a half could develop into some kind of a decent rally. But that's the small story. If this little double bottom works, it's supposed to move up to, I don't know, eyeballing it real quick, it's going to be something like 125, which is going to be dangerously close to the neckline of a 2-year head and shoulder bottom. It's a double shoulder, head and shoulder bottom. First outside shoulder is a double bottom by itself. Worked great. Second inside shoulder is a single, and it popped up pretty good. Right back to resistance, right back up to overbought conditions, and collapsed all the way down to a buy signal on the bottom, of course, October 23, and a rally back up. Now, the inside first shoulder, April 25th, single, much like that inside shoulder, single. But the last shoulder we are, I believe, in the process of developing and finishing, as of yesterday, I think, is a double low, just like the double low back in October of 22. 2 years, a whole mess of symmetry, timing is good, price levels are very adequate, formations are great, and there's a formation inside a formation. The upside objective on this giant pattern won't happen for many months. I think at the very, very earliest, we're talking 6-9 months. It could easily last over a year, and it is all the way up to 150. 10-year notes are the same. Everything is the same, just the numbers are different. Double low, outside first shoulder. Basically single, the head of the formation, and we got a buy signal at the very bottom on both notes and bonds. Fantastic. Single shoulder basically on the inside. And now, and not as good as bonds, but close to a double bottom like we had over here. Not the best. Bonds look better. They look better. We were short. We made some very good money on that trade. Now we're flat, and I think we're about to turn up. Now we're oversold, but we did not have a bullish engulfing yesterday like we did in bonds. That's okay, as long as everything starts to move its way up. The real important trigger here is closing above 111.21. That's going to cause everybody, even the stubborn people, to realize that was a low. And now we've turned up probably for more of a rally. Okay. Crude. I'm sorry, we're still between a rock and a hard spot. I can't come to a conclusion on what's going to happen. I got to be neutral for a while until I see some reversals or some indication of breakouts, whatever. Also, it's very similar in the heating oil, but it does have a very good downward sliding channel, and that puts your bias on the bearish side, of course. And we're at resistance for the third day out of 4 days in a row. So I think we're in the process of rolling back down. A break below 212, 2.12 is going to cause it to break this low and keep on going down, which is very similar to what we're about to see in a minute or two. Soybeans, they have broken out to the downside. The grain markets are heading down big time. So on heating oil, we go to natural gas. And is it going to form a bottom formation? Well, things are looking okay so far. I think we're supposed to have one more low in a week or so around Christmas and around where my little marker is here, about 129.5-ish. But we're heading up a little bit at the moment. We could just simply break out to the upside now. The shoulder would be a little closer to the head of the formation than I would have expected, but it's still there. This was a small head and shoulder bottom that worked fabulously, and I called it. Plus, there was a bottom with a bullish engulfing on the low day, which now, after the small pattern worked, got a sell signal on the top of the rally. Come on. I got the low day. I got the high day. I got the low day. I got the high day. 4 in a row. That's great. Now, can I get the low day? Remains to be seen. Looking for a little more weakness? Maybe. I like what I see. Overall, I'm making a case for a bottom formation that could accommodate a little bit more weakness. Again, down to about 3.0, maybe a little higher than that, but only in the next week or so. And in general, any time now, it could just start going straight up. My minimum upside objective for this whole shebang is 4.8. Gold. Another lower close looks likely. We had a bearish engulfing ER sell signal on the high of this little double high, which I think is a double shoulder, just like on the left side, high and another high. The top of the formation is not quite acceptable for a double top, but, kind of close. Okay, let's call it a single and overbought condition. Fine, no, doesn't change anything. Now, if that's true about last week's bearish engulfing, almost in overbought conditions, it came super close. So it's still working, even though it didn't give me a signal on a red bearish engulfing sell signal, ER sell signal. It came super close. So what's it going to do? I think it's going to break below 26.28 and then head south toward the neckline, which is downward slanted a lot. I don't like that very much, but it's there. You got all the body parts, and the downside objective could be 22.74. Big move down, especially from where we are. Silver did have a bearish engulfing last week on the high day. Great. Heading down toward the neckline, which is right here in a support area, but that doesn't mean it's going to hold just because it's a support area. It means it could, maybe it's likely but nothing is cast in stone in this business. So you have to think pattern is the bigger picture here. Push into support, bounce maybe once, break it, and then we're down to 24 and a half. Platinum looks like it's the closest to its neckline. All three of the precious metals have this pattern. I didn't get a sell signal in the last shoulder area, and it was kind of sloppy, not very well defined. We got a sell signal on the high day, gotta love it. And on that high day, gotta love it. So the minimum downside objective here is 789-ish. And we are close to a breakout. Could happen any time now. That would break support. It would break a neckline, and it would be new lows for a very long period of time. Looks like since last November, a year ago. And if that's broken, which it will be if I'm right, then you have new lows for, looks like, yeah, about 2 years. That's correct. Next. Copper, we got a sell signal last week on the high day. Exactly. Every single day since then has been down and then down and then down. And today we're up a little. Now we're not hitting our protective stop, which is around 4.19, sorry. And we will take an okay profit. It's not a real big one. I'm thinking we may not hit my stop, and we may, in fact, turn around and start to make new lows again and start to break this support area. And if that's true, then we're going to break down to a lot lower levels, probably in the ballpark of at least 3.7, and maybe a lot lower than that. Looking for substantially lower levels. And we are still short from the high day on the sell signal. I believe I changed the kicker yesterday afternoon after we talked to be a little bit slower. I was using a 5, and when you make the number bigger, I made it a 6. Well, okay, I'm not going to take the time to go through this. But having done that, you simply, maybe I left it the same. Slow it down. Either raise the stop or lower the stop, depending upon your preference, and then leave it alone. It's automatic after that. But you can make adjustments as long as, of course, you're not stopped out already. You can't turn the clock back. But while you're not stopped out and in a trade, you can make some minor adjustments here. It is not a moving average. I don't like moving averages. They are designed on purpose to be after the fact. My strategies try to pick the day the market turns. Next, soybeans. Finally, we got what I said we were supposed to get. Big down day. We're down 23 cents, over $1,000 today alone. I never did get bumped out of our STS, which I think I'm going to start to lower a little bit because now it's dropped off a large chunk and it's not even protecting a profit yet. So I'm looking for those significantly lower levels on soybeans. You realize that this is a new low in soybeans for at least 3 years. That's all I loaded, 1,000 days. Whopper of a new low breakout. I do mention that we got oversold today. So having dropped off this much below what is now going to be a major resistance area around 975, I have to tell you, any rally back up to 975 within the next few days or a week or two should be a great short sale. Next, soybean oil is breaking down. Now, yesterday it got below the support level, but closed just above it. And today, even the high of the day is at that resistance. Now the resistance was support level. And we're at the low of the day almost, making new lows for a couple of 3 months. We're going to attack the lowest low for a couple of years, and we're probably going to make new lows for over 3 years. Big breakout to the downside in soybean oil. Soybean meal, same story. Big downside breakout, but we're getting oversold. A rally back up to the resistance area at 286 should be, hopefully will be a great new short sale if we can get a bounce. Right now, it's doing what I expected. It just took weeks for it to finally break out, but hey, it did it. And now corn. Somewhat the opposite, but not a lot. It had a breakout to the upside, which has proven so far to be a bullish breakout. And it stayed below the last week, the neckline on what looked like a head and shoulder bottom. But guess what, ladies and gentlemen? It's not. I am going to, and I am erasing the markers. I'll leave the neckline in because it is a trend line in effect, a sort of a trend line. And I want to continue to leave reference to the false breakout. So the objective has now been canceled. The shoulder pattern had been canceled. And we are making another new low today after it failed to hold what looked like at the time a regular breakout. Okay, I got to turn bearish. I'm looking at 426, very likely. And I think it could drop all the way down to below $4 and relatively quickly. Wheat. Now, we just barely got oversold today. The RSI came down to 24.76 below 25. Barely, but it did it. And as a result, oversold at support gives me the impression that there should be a rally, which, guess what? That looks like a shoulder. That's a lower low for the head. And this is a little close, but not a new low, not a double bottom. And you could claim that it's a shoulder. Now, look, we're down 1.5 right now, 1.75. And you've had a higher high, a lower low, and you're oversold. All this has to do is close above yesterday's closing price. And we will have a bullish engulfing green buy signal today in wheat, creating potentially the last shoulder low on a head and shoulder bottom. And I'll draw the neckline in for you right now. And there it is. Now I'll also draw in the minimum upside objective, which is the distance from the lowest low to the neckline on the same vertical mark. And now take that measurement, and I'll use it a couple of days in the future like this. So I'm looking at a minimum upside of 595, which could be a lot more than that. Why? This pattern that's only a month and a half or so in size is really the second low on a broad double bottom from August to December. That has an upside breakout of this price level. And if you start to move your way up above 635, then the minimum upside objective is going to be all the way up to 7.25. We're now at 543. There is that chance that today is the beginning of a really big bull move, but I've got to see it. It's not there yet. It's got the parts to it, but they're not in the right place yet. Please rally, and I'm going to get a signal. Next, cattle. Well, what can I say? Had a bearish engulfing on Monday, screamed bloody murder to you, false upside breakout from a resistance area, down yesterday, and down again today substantially. We are short from about 190 and at 188 at the moment, so it's just getting started in my opinion. Overbought, looks good. New highs, failure to hold, looks bearish. Red ER sell signal, perfect. 2 days into it, we're making more money. Downside move should at least be 185.9. And I think that's not going to hold, and 184.4 is not going to hold. So I am really thinking it can come down to 175. Miss Piggy, at support, no signals. Basically failed on an upside breakout with overbought conditions, similar to cattle, but not the bearish engulfing. So we've come down already for a couple of weeks. Now at a little support, not oversold, I think it could probably drop into the support area and make it down below 82. Then we're supposed to get down to 77. Let's see if we can get that far. Then I'll talk more about more bearishness maybe. But let's see what happens. If we get down to 77, I'm sure we're going to get oversold in the process. Okay, this is the one stock, SQ. Today, maybe a little bearish engulfing. Remember, I think the stock indexes might start to drop off a lot more, break support, and that's probably going to drag this down. I don't mind that. The major support area is 89.5. It wouldn't damage the long-term picture even if we drop back to, say, the low 80s. But somewhere from about 90 to the low 80s, we should see it turn around and move back up again, just like the stock market indexes, and I wouldn't be surprised if it was on the same day. Back to the E-mini. We're up still 0.25, 6.25, not much. I need to see it start to break these lows, and I think it could be about 30 minutes from now when the FOMC meeting is done. You guys have a great day and profitable trading to you.